I feel like it's important. I feel like it's important. So I feel like it's important. So you have what we call the strategic clock. And let's use a simple example to explain everything. Practical example. Okay. And where these strategies will be relevant. So we said that the no-frills strategy, for instance, you have the no-frills strategy, for instance, you have low benefit with a low price, you know. So let's think about it. Why would a company do that? Why will a company do low benefits with low price? And what example can we give? So if you've realized, there are some Chinese products that flooded the Ghanaian market. They were, I think, cloths. It was very cheap, and the quality was low, you know. And that's what some people in economics call dumping. Dumping. That's what some people call dumping. You know, that's what some people call dumping. So companies could do that to access a market. If you want to access a market, you might use a no-frill strategy. Then we also talked about the low price strategy. The low price strategy. And the low price strategy, what we said was that they give normal benefits at a low price. They give normal benefits at a low price. Again, you could use this strategy to gain access into a market, or to even penetrate a market. To penetrate a market. Then you also have the hybrid strategy. You know, the hybrid strategy, you use it when you have different sets of customers. You know, different sets of customers. You use it when you have different sets of customers. You know, you might have customers who are into higher benefits, and you have customers who are into price. So you use this strategy to capture both sets of customers. That's when you use the hybrid strategy. It's a mix of low price and higher benefits. Then you also have what we call the differentiation strategy. The differentiation strategy. The differentiation strategy, where, like I said, differentiation means a unique strategy. So the example of a company that uses a differentiation strategy is Apple. You know, Apple products are special, very, very special. And companies that deploy the differentiation strategy are targeting certain group of customers within the market. They are not interested in everybody. They are not capturing everybody. Apple is not for everyone. When you go to China, Apple is not common. So they are targeting a certain group of people. They are targeting a certain group of people, and that certain group of people, are more into value and uniqueness. Value and uniqueness. That's why there's a whole brag around the Apple products. Then for focus differentiation, like I said, this is selling for a high price for high benefits. A high price for a high benefits. Again, the niche for this market is extremely small. Extremely small. These are premium products. Premium products. So for instance, I remember when I was in Vodafone again, we had premium products, and the subscribers on premium products were not as much, you know, as we had segments. We had premium, mass, etc. So the mass people, they were a lot. This is where the 1 Ghana products, 2 Ghana products are. The other products for premium, it's just few people who are on it because it's expensive and it offers more value. Very, very key. Very, very key. I hope the strategic clock makes sense. Or if you have any questions, you can ask.
Hello, sir.
Yes.
So among the different strategies that you've mentioned and then we've discussed, which one is most efficient, or which one works the most?
Okay. So you're asking, among the several strategies, which one is the most effective or most efficient? Right? True or false?
Yes, that's the question.
Okay, fantastic. So strategy is context dependent. How effective a strategy is, it depends on the situation of the business. So we cannot say this particular strategy is the most effective, and we cannot, that's a very, very good question. Very, very good question. But we cannot say this particular strategy is effective or it's more effective unless we apply it to a situation. If we don't apply the strategy to a situation, we will not know whether it's effective or not. So let me give you an example. Think about a company, right? Think about a company that wants to be, cater to rich people. They want to cater to rich people, like they want to serve the rich people. They are not interested in the middle class and the poor. What kind of strategy would be good for them? The strategy you need to apply as an organization would be a focused differentiation strategy or a differentiation strategy. That would serve them a lot better because that's the situation, that's the context. That's the context you are in. So it depends on the situation you are in. So for that context where you are serving rich people, the focus differentiation strategy is good. But the focus differentiation strategy, which is good when you are serving rich people, is bad for poor people because poor people are not into high prices. They cannot afford it. They cannot afford it. So it's all context dependent. It's all context dependent. It's all context dependent. That's why there are organizations that have different strategies for different people. So for example, maybe if you are going to buy credit, you barely buy 100 Ghana cedi credit at a go. Will you do that? Hello? Can you hear me?
Hello, we can hear you.
Yeah. So you barely buy 100 cedis credit at a go because your income levels probably don't reach that. So the strategy for you will be different. Your strategy for you will probably be a no-throw strategy. That would serve you a lot more. The other people can afford 100 Ghana cedis credits every single month. So for them, their strategy to be different. So the effectiveness of a strategy, my whole point is that the effectiveness of a strategy can only be determined when it's applied to a situation or a context. It's only a situation that will determine that, when we look at this it's just like maybe you have a life situation, you have a problem to solve in life, right? Maybe you want to start your IC or do something. You carve strategies to try and resolve the problem you have at hand. If you take that same strategy and apply it to another situation, it will not be effective. So it's all dependent on context, situation. That's what I'm saying. I hope you understand what I'm saying. Is it clear?
Yes, please.
Yeah, so we can't say that this particular strategy is the most effective for all of them. It depends on what you as an organization you want to achieve.
Oh, okay.
You know.
So if I get you right, can one organization implement or maybe adopt two or more strategies to achieve their goal, or it's just like when they take one, then they settle on it for some time before, if they want to change, they change. But then there is not like a combination of the various strategies.
That's a good question. So, your question is, can a company use one strategy at a time, or can they deploy a combination of strategies? That is the question,
Yes,
right? Yes.
yes, please.
Yes. So companies can deploy combination of strategies. They can deploy a combination of strategies. So, for example, let me give you an example. In Vodafone, or let me not mention in most telecommunications companies, what you don't know, what happens inside is that because every human being is making calls, it's like selling water. Most human beings, maybe 70% of Ghanaians have a phone, or 90%, you know. So it's basically the entire nation. Okay. So what telecommunications companies will do is to segment the market. Because different customers require different strategies. So they'll segment the market based on, let's say, income levels. So a typical example would be you segment the market into mass, and when we say mass, it means the people who don't have a lot of money. And we say premium, we mean the people who have a lot of money. That's a basic assumption. So the strategies you use for the people who are in the mass segment, like students, like market women, is different from the people who are in the premium segments, who have like money.